Avoiding losses is fundamental to generating a return. So we asked 3 experts, which asset class is most likely to burn investors next year? What's the one asset class most likely to deliver a negative result next year?
We think the Australian dollar. We're actually still quite bearish on the Australian dollar. Part of the reason being the RBA has still got more to go, and whether we'll do QE or not here, it'll certainly be the source of huge debate in the middle of back half of next year. Just the debate alone will keep pressure on the currency, but I think what's interesting to us is that in all of this optimism and risk on that we've experienced over, say, September, October, the Aussie dollar really hasn't got off the canvas at all. It's had a little bit of a rally, but given it's a reflation-y type currency, it's trading very, very poorly. So we still think that the ultimate theme has more to play out, and it'll be lower over next year.
When we reflect on the low yield environment, one of the things that's occurred in terms of asset allocation is a lot of money has moved into bond proxies, if you like. We think some of those are well supported, but there are others where the earnings may not be as stable and therefore may not be well supported. One area is high dividend paying stocks. We think that's an area that's set up for disappointment in 2020.
Globally bonds, in particular US bonds. Multiple reasons. We've seen inflation has been running above 2% now since March 2018. There's scope for that to continue to move higher. But it's really the reappraisal of where they are in the growth cycle. And we think the US is bottoming out and actually re-accelerating at the moment. There's strong reasons to believe, I think, that as we move into that environment, the bonds are going to be the biggest underperformer of all the asset classes.